Dear colleagues, our keynote speaker for the morning session today has a remarkable journey in academia, which has had a profound impact on both entrepreneurial finance and fintech arenas. Please join me in welcoming Dr. Sofia Johan.
Thank you, Mustafa. It's always challenging to be the first speaker after an amazing gala dinner, and with half the room being very jet-lagged. It's either you slept at 3 or you woke up at 3 today. But thank you for having me, and thank you for taking the time so early in the morning to come here. Mustafa, it's not that he didn't do his homework. I asked him to be able to introduce myself, because I find it's easier than having for the organizers to rely on a 20-year-old bio with a 20-year-old picture. So as in the program, that's a really old picture. Anyway. So my name is Sofia Johan. I am an associate professor of finance at the Florida Atlantic University. And before I go into sort of a bit about my background, what I'd like to do today is sort of give you an understanding of how I approach my research. And the reason being is I love attending keynotes. The problem there sometimes is I get a bit jealous when I have to sit for an hour or 45 minutes listening to somebody else come up with amazing research and being very innovative. So I prefer to sort of give you an idea of how I approach how my research has evolved in a way. I don't necessarily approach it. It sort of came by accident. So again, as a bit of a background, I'm originally born in Malaysia, so I'm Malay-Malaysian. Malaysia is a multicultural, multinational country. So we have the Chinese, the Indians, and a bunch of other religions. And so I was raised there, and I was also, because my parents are expatriates, I also have lived in Houston, Los Angeles. And I started my academic career in England, so I'm legally trained. So I did law, because I wanted to be a doctor. I realized I can't stand the sight of blood, makes me want to vomit, so that doesn't help. And I didn't really like anything else, but I knew I could read, so I was good at reading. And so I became a lawyer. Realized I hated that, but I still did my master's degree. So I did I went to Liverpool to do an LLB, and then I went on to do a master's in international economic law. That's when law started becoming really interesting to me, because what I did was spend, 2 years, a year and a half, looking at multinational trade agreements and understanding the systemic risk of the regulations that we have around the world. So that's how I approached it. And then so after that, I went back to Malaysia, and then I realized lawyers don't get paid a lot. I had a drinking habit I had to sort of fund. And so I joined the finance industry. And I started at a derivatives clearinghouse. Now, mind you, I didn't know anything about finance, nothing. But I did take a course in securities law during my master's. And so I had to go back, read the textbook again to figure out how to do my job. And I did that for a few years. And then after a few years, I rose up to the level of manager, legal counsel, and then also company secretary. So during that time, one of my directors came up to me and said, hey, do you want to help me start up a venture capital fund? The Japanese government is going to dump a lot of money into Malaysia to build up a venture capital industry. And again, I didn't know what on earth venture capital was, and I had to go back, and this is pre-Google. This is how old I am. I had to ask Jeeves what venture capital was. But I'm a strong believer that I don't have to know what to do. As long as somebody thinks I can do it, I'll do it. So of course I helped start a multi-million-dollar fund. This is ridiculous though. So, and working for a few years, then I decided I needed a break. Working for a government-owned fund was fun, but challenging. So I needed a break, and I applied for a PhD program. I wanted to go backpacking in Europe. My parents said no, so I said, this is one way for me to get to Europe. So I went to Tilburg University, and there I did a PhD in law and finance, or law and economics at that time. So essentially what I did was I helped my supervisor look at how changes in laws affected venture capital, changes in laws and regulations affected the contractual terms that were entered into by venture capitalists and their firms. And as I mentioned before or earlier, I worked with Dutch data in an area which was rather under-researched. So it was challenging to find outlets. for papers. But I was lucky enough to be able to publish my chapters in finance journals, law and economics journals. So that's when I started realizing the value of interdisciplinary work, or the value of bridging the disciplines, and how I could sort of arbitrage the journals in that sense very early on. And so, I did my PhD at Tilburg University, and I started working with my co-author very early on, Douglas Cumming. And then we worked so well together, I realized to save on emails, we got married, right? So it was just so much easier. I knew where my co-author was every minute of the day. We didn't have to worry about each other stealing each other's ideas. But now we regret it because we're like, well, how many co-authors we could, but if you could marry more co-authors, you might imagine how productive we would be. So we decided, and he was working on Canadian data. Again, nobody cared about Canada. I was working on Dutch data. Nobody cared. So we thought, if we merged data sets, how would that work? So 2 kids later and a bunch of papers, it's been productive. But, and so we have lived in Toronto, we've lived in upstate New York, and now currently we're living in Florida. And we enjoy it, but then having said that, in the summer, this is where I flew in from, this is where I am during the summer. This is where we do a bunch of our research. So this is Manaki. This is a small town. When we talk about Sundsvall, Manaki has 100 people usually. The largest town close to it has 15,000 people. So it's very much like Sweden. We have a sauna there. It is Sweden incarnate. And I say this because basically I took a boat from that little island where the house is to the end of that picture, got into a car. 3 hours later, I was at the Winnipeg airport, Winnipeg, Toronto, Toronto, Copenhagen, Copenhagen, Stockholm, got on the train and saw this exact same scenery 20 hours later. So here I am, right? So, we're lucky enough to do this because we've had co-authors out here, we've had PhD students out here, because this is how we sort of wind down and we think about our research, right? And so also there, when I'm not teaching, then I also am helping other researchers in the sense. So this is what I do on a daily basis, which is to deal with submissions from these journals. So over the years, I have been lucky enough to be able to be involved in a few journals. So, and I list it based on the ranking of the ABS journals, or AJG now. So I am either associate editor or I'm on the editorial board. So the difference there is that either you co-editors manage the papers and then allocate the papers to other associate editors. As an associate editor, I get a paper allocated to me, and then I find the reviewers. As editorial board member, you are asked to review certain papers over the years, and also you may be asked to step in as associate editor if that is required. Which means, as an editorial board member, I then become a guest editor in a way, and then find the reviewers. So this is how it differs. And how I got into this, again, with my research that was quite multidisciplinary in a sense. I have research that uses, that is targeted more towards accounting journals. I have research and management journals. I like to work with papers that look at sort of entrepreneurial finance. And if you recall, I started a venture capital fund with my colleagues. So that's how, and my background is venture capital contracting. So that's why I'm very interested in early stage financing, which then transfers into entrepreneurship, right? So I'm straddling multiple areas where I'm looking at the management, entrepreneurship, which is now a separate division. It was not before. Entrepreneurship was part of management. Now they separate that. And then I also straddle into entrepreneurial finance because I look at the funding of these companies. So that's why I work with ETP, I work with British Journal of Management, and then of course there are other research and finance research letters, which I do enjoy submitting to, or publishing in finance research letters. But I also am working in areas that look at innovation and technology, which is Journal of Industrial and Business Economics, and sort of other areas. And I am also now rather involved in sustainable finance. Once you start going into fintech and you start looking at the efficiencies of financial technology, then that's one of the tenets of sustainable, the UN goals. So that's why it sort of also seeps into sustainable finance. And that is my background. to a certain extent, right? So, and that's sort of how I also got into fintech. Again, my background, venture capital, and I started working in venture capital, which is the same model, financial intermediation, hedge funds, and then because I worked for a government fund, then I started working into sovereign wealth funds. So I was sort of not necessarily having a specific area of research. It's more so I used what I knew from my experience in applying that into the papers. So, and this is where sometimes when I do read papers to review, or I do read papers as I edit, I feel a bit sometimes that a lot of academics don't necessarily fully understand the institutional aspects, the practical aspect of the research that they're doing. The methodology is great, literature review is great, but they don't really understand how hedge fund managers think or how managers think in firms. And this is why, because that's one, I suppose that's one strength that I bring to the research, because I know how it works and I know why people do what they do in this area. So, so then when fintech started, again, I'm old enough when VC was still relatively new, but I'm old enough where fintech is still relatively new. And so when we started going into fintech, it was crowdfunding was very big. AI was not really a thing yet. Elon Musk hadn't made a lot of, leaps and bounds into industry yet. So it was more so crowdfunding. And that started around 2008 after the financial crisis. And why I like that research was because it is when retail investors were doing what accredited investors could do. So my area of research was at that time, remember, if you have financial intermediation, hedge funds, venture capital, sovereign wealth funds, real estate investment trusts. So now, and those are areas, and I'm teaching these courses where I'm telling my students, you're not allowed to invest in this, but you have to learn how to manage these funds because you're too poor to invest. You may be smarter than any other lottery winner on earth, but you're too poor to invest in these funds. And then fintech came about, crowdfunding became legal, and that's when retail investors like you and me, or my students who are drunk at 3 a.m. in the morning, can start investing in companies. So you can imagine how interesting that became at that time. So that's sort of how I got into fintech. And it started with crowdfunding, and then it went to peer-to-peer lending, and now you have, of course, digital banks, and you have blockchain-powered solutions. So I've had to evolve as technology evolves. And mind you, I'm severely, technology deficient. I don't even know how to link my remote control TV to my remote to my TV. I literally don't know how to upload my computer, the virus software. I just buy a new computer every 2 years. It's just much easier, right? This is how bad I am. But I'm doing research in this area. So most of my time is trying to Google and chat GPT, what is AI? What is AGI? What is ASI? I don't know. But I'm doing my best. And that's sort of how it's evolved. So, and all of you, the beauty of this small conferences is that you all know what I'm talking about, fintech. We all know it's how it has actually disrupted the industry. So the economies, it's disrupted banking, and it's going to continue to disrupt the markets. It dismantles barriers. It reduces frictions. I mean, the list is endless in a way, right? But as I'm doing my research, I sort of realize it's been siloed. We've all been looking at fintech in separate countries. Fintech in the UK, because that's where it started. Fintech in Australia, because that's where it's legal. Now fintech in the US, because it is increasingly legal. And again, when I say fintech, I'm also talking about crowdfunding. For many of you, crowdfunding isn't considered fintech, but there is that, for me, the understanding started when it's financial technology used for financial markets or financial companies. Currently now fintech is payment systems and technology used for companies to increase their performance. So it's sort of evolved and expanded. But when I'm doing my research, I think about how we are just using it in silos when we should be looking at it from an overall perspective. There was a paper I listened to yesterday which talked about systemic risk. And I think that's where we're sort of understanding the increasing vulnerability that we have in this world for the systemic risk if we do not do studies on a worldwide basis. So that's sort of how I'm approaching this. Another way that I approach research is I always Google Scholar. Google Scholar is my best friend, right? I think I Google Scholar more than I text my own children. So this is sort of a graph that's based on a paper that Doug, again, co-author / husband, and Robert, he's a student, just a student, right? So, but he's on the job market next year. So we wrote about global fintech trends, and you're looking at the impact on international business. And so this is in Multinational Business Review. It was published last year. So we always Google Scholar. So I tend to Google Scholar keywords. And so if I want to do any research, and I just realized, as you can see, fintech, yes, it is a growing area of research. As you can see, it is becoming sort of a glut. So that's sort of why we're expanding the definition of fintech. But you can see when we talk about fintech and international business, there is a huge jump in the number of papers. That means the call is being met. So you can see it two ways. You can either see it as, well, obviously the gaps are being met. But having said that, to me, it just means there is more call for research, and they're actually applying what the other papers have alluded to, or base the other papers and their extension to theory to an international perspective. So that's sort of what I like to do before I do any research. So sometimes when I'm listening to your papers, I think, oh, what if I do this? Well, this is an idea that I have. I Google Scholar it. So it's not like I'm checking Twitter or I'm checking Instagram on my phone while I'm keying in my phone. I'm actually trying to figure out whether there's an area I could do research in. So as I mentioned earlier, the definition of fintech, and I'm sitting in the conference the last day, there is still this debate of what fintech is. So we know that our prior studies have found that it's innovation. I do work in entrepreneurial finance. So I do work where we actually measure innovation, because that's a performance, that's a KPI for companies. There's still this debate about what innovation is. Is it just that how to measure innovation in companies is debatable, right? So nobody really likes patent counts, citations, what have you. So that's the same thing with fintech. So it helps companies deliver financial services, and so that means that it's only limited to the crowdfunding and the peer-to-peer lending, or is it the application of data analytics and artificial intelligence and blockchain in companies? So is it the model or is it the output? So, and it expands every week. So I'm not going to sort of argue what fintech is, because I'm happy to have anything become fintech, because I think this is what we have to think about in research. So in addition to the definition of fintech, we're thinking about adoption of fintech. So so this isn't something that I would base any sort of paper on yet, but we're looking at Ernst & Young did a global fintech adoption index. There's a bunch of databases that you can get access to adoption of fintech. Everybody's interested in how companies and countries are adopting fintechs. So globally, you're looking at about 25% rate. Then, of course, about 46% of SMEs are using fintech services, payment systems, AI, what have you. So, and 1 in 4 companies, 1 in 4 SMEs are using fintech services, and that's going to continue to increase. So my interest there is China, because as you can see, China's incorporating it much more than other countries, much more than the US. So Ernst & Young, you've got the World Bank Global Index. Some of the papers I've listened to here, you're using these data sets. IMF Financial Access, IMFS, that's another one. But it still doesn't really tell us which companies are using fintech. So that's what when I looked at the data sets, I thought we have to do something about this. So I have a paper that I'm working on. It's a working paper with Xi, Liang Zhao, and I'm horrible with names, Lei Liu. Great co-authors. I met Liang at a conference, and we started talking at dinner, just as we were doing yesterday. Not as much alcohol, so it was this paper came out. So what we did was we wanted to look at fintech adoption and greenwashing. As I said, I like the ESG area. I like looking at greenwashing. So for those of you who don't really know what greenwashing is, it is when companies say they're environmentally friendly, but actually they're not doing things for the environment, more so for their performance. If you look in your hotel, as you enter the door on your left or your right, there's a notice board that tells you, how to get out of the hotel if there's a fire and whatnot. And there's something that tells you the things you can do in the room. So one of it is if you hang up your towel, that'll save the environment. That'll save the world, right? Because they don't have to wash it. We all know it's so that they don't have to pay for the labor cost of washing the towel. It's got nothing to do, well, something to do with it, but let's not sell it as just, saving the world. Let's hang up your towel. So that's what greenwashing is, and it's very extreme. And the beauty of this is that in China, they actually do a list. They have a greenwashing list. So they name and shame. Companies like Tesla, companies like, the major companies in the world, there's about 37 ways that you could be deemed as greenwashing. So we sort of combined those two areas, and we decided, we actually did text mining. We got our own data. We did an index of fintech adoption in companies in China. When I say we, let's not pretend that I even know how to read Mandarin or Cantonese. So it's they, right? So they basically looked at the firm-level fintech adoption, and we did the index. And then we also then had to create the greenwashing sort of index to again scrape the data to see which companies and to what extent they were greenwashing. So we have this data. So we were able to look at high-tech companies and non-high-tech companies, because non-high-tech companies are also deemed as polluters, whereas high-tech companies are deemed to be good companies. So we wanted to see whether the adoption of fintech by these companies would matter. But it's always a problem with publishing in journals, and we wanted to make sure that it was either management or entrepreneurship, and we wanted to have a broad-based, broad-based outlets in a way. So we have to find the mechanism. So in a lot of journals, a lot of I suppose editors are not necessarily that fussy about the mechanism, but currently now they need to know how. So if you can measure, you find the results that the companies are incorporating fintech, you find the results that there is greenwashing, but how does that work out? So we have to find a way of how that really affects managerial efficiency and managerial the managerial ability to choose to greenwash. And we were able to do that through our empirical analysis. But we have to be very clear that this is, it's not just the results. It's more so we could find the channel or mechanism from the adoption to a corporate action. So that's sort of what we're working on now. It's actually a fun project, but we had to get the data. So this is, again, in entrepreneurial finance, when we talk about fintech. I think another paper yesterday that said that it's the beauty of, I think it's the beauty of a lot of these websites is that everything's opaque. There's one woman who has $600,000 in assets. I'm thinking you got to find out who that woman is, because if she has $600,000 in assets, she's pretty available, I guess. But same thing with fintech data. It's easy to get. But then there's that arms race. It becomes an arms race where when I was doing venture capital research, it was very much if you have $60,000 a year to spend, you can get data. You can get PitchBook. You can get, now it's, if you have an army of PhD students who can spend 4 years getting the data, there you go. So it becomes an arms race, right? But that is a challenge that we're trying to meet. There's still a lot of room, and I'm trying to highlight sort of when I'm doing my research, what I see there's room to consider, which again, hopefully you will consider filling in these gaps, right? There's a lot of room on cost savings. So how exactly, when we talk about company performance or we talk about industry performance with incorporation of fintech, we sort of have to understand what is the mechanism. So what are the cost savings exactly, right? So what are the process efficiencies? So what exactly is happening? And of course, consumer satisfaction. There was a paper yesterday that looked at consumer satisfaction. And there's important results we can get from this, but it's just finding the right measure of rigor and originality, right? More importantly, we need to figure out a very standardized method, a metrics to sort of track fintech's evolution. They haven't done this very well in ESG, so in fintech, hopefully they can do this. As we know, ESG, none of the ESG rankings actually correlate, so which is a nightmare for researchers. So hopefully this doesn't happen in fintech if this is created, right? So, I mean, when I look at the program, what I found interesting is that we're all discussing the same thing. So we're looking at internet money, we're looking at internet banking and mobile money. So we know about mobile credit cards. And again, I am from that era where credit cards were new, right? So when I tell my students I predate one-click buying for Amazon, they look at me like, wow, is that even, they were born with one-click buying on Amazon. So I predate this. But what we forget is that mobile payments predates mobile credit cards, mobile credit. Mobile payments have been around for ages, not necessarily in the countries that we live in, but more so in the African countries, right? So you have mobile money like in Vodafone, introduced it in Safaricom. We only started this in Apple Pay recently in parts of the US and Canada. So they predate this. And in fact, I was reading on the plane 2 days ago that there is an app that's introduced in Senegal where you can transfer money, because if you think about the billions of dollars that is remitted back to these countries, right, from the workers, from the workers overseas. There's an app where you not only can remit, but you can manage the bill payments from overseas. So if you're sending money back to Senegal, you can actually have the money paying directly to these bills, your electricity bill, your rent, your groceries, and so that you can control it, right? So now imagine that level of technology where you're able to do that, where it's not just paying, but controlling the expenditure from thousands of miles away. So this, again, is very interesting. So this is mainly in countries that are rather under-researched. So as I have a paper, I have a couple of papers with a PhD student from Aberdeen. I was a chair of entrepreneurial finance in Aberdeen for a few years. And so I work with the PhD students, and I have a paper where we look at the mobile money accounts of sort of younger people or older people in non-high income countries. So again, when we're looking at this, we're looking at significantly sub-Saharan Africa is interesting. And so this is sort of, to me, when I start looking at this and looking at the data, I just find it that I always consider what are the pros and cons. So the pros of mobile money is, you use this transaction fees, you've got alternative markets, you can customize financial solutions like what they're doing now, where they're actually enabling others to control the expenditure within the country, which I think is quite significant. But what are the cons? I always like to look at cons. Everyone likes to study the performance measures or what fintech brings to the world, how good it is. I like to look at downside. When I was working, I was part of the business continuity planning committee, where I look at what is the worst case that can happen and how do you deal with it. So I'm very worst case scenario. So when I'm on a plane, I always bring chocolates. I always figure remember that movie Andes where where the rugby team hit the mountain and they had to be cannibals? So that to me is worst case scenario. Death is fine, worst case scenario is I have to be a cannibal. So I always bring chocolate, so in case I crash, I will be able to survive for a few days, and everybody else can eat each other. When we think about the cons, right? So here I think about how it's in competition with traditional banks. I always look at complementary or substitutes, right? And of course, we're looking at the digital divide. So I have a paper on how access to energy or energy poverty and also financial freedom within countries will affect access to fintech. Very short papers, simple discussion. I'm not spending a few years on studying this. It's more so, this is an idea. Why don't we get 2 variables or 3 or 4 variables, and let's run a couple of regressions to see. And so we're looking at the digital divide, which is also quite an interesting area, which also when you're doing your research is something you have to consider. It's not just whether it's the regulatory aspect of 2 countries, it's access to, remember, fintech is access to electricity, it's access to the ability to incorporate fintech into these companies. So, and as I mentioned earlier, one of the papers I did with DJ is we're looking at mobile money innovation and global value chain participation. Very simple, finance research letters, one of my favorite outlets because it's just easy, it's quick, and it's very rigorous, but these are fun papers to work on because it's just an idea that I had or we had, and we just thought we'd work on it, right? So we look at about 19 developing economies, and we find that mobile money innovation has a significant effect on the ability for them to participate in the global value chain. So it's not necessarily just the companies getting better performance, it's so how do they, as sub-Saharan countries, become part of the world. And to me, that is important because understanding how that ecosystem works. So of course, there's still room for this. So when I'm doing this research, there's still a lot of room for this regulatory uncertainty in these areas. These are ideas that we couldn't incorporate in our paper because of data, or it's just we thought it's somebody else can do it, right? And then of course we're looking at regulatory approaches. Yesterday there was a paper on I didn't realize, for example, that Sweden, then negotiable instruments or cash is voluntary. You don't have to accept cash. In many countries that I'm familiar with, negotiable instrument means you have to accept it. Cash is not an option. Whereas now I know there are countries where cash isn't necessarily an option, which is again very interesting, and that's why I love attending conferences like this. And so, we've done mobile money, crowdfunding. Again, this is my pet area. I love research and crowdfunding. To me, it is really democratizing access to an area or an investment area which had not been made available to the retail public. I have done research in crowdfunding in Australia and the UK, where it started. In the US now, I'm starting to do it. It started really in 2016. More importantly, it used to be where a company or an entrepreneur could raise $1 million a year. It is now $5 million a year. I teach corporate finance. When I tell my students, don't just think about banks and share offerings. Think about crowdfunding, because your company, if you need only $5 million a year, you only have to submit a couple of years of financial returns. If it's over 500,000, I think it's over 300,000, it has to be audited. If not, it doesn't have to be audited. I'm sure many of you have applied for credit cards where they ask you for 10 years worth of history. You can now raise 5 million with 2 years worth of financial results. So think about that, right? So, and I've done work in equity-based crowdfunding, which is where we, in Florida Atlantic, we've actually created a crowdfunding tracker. As I said, data is always an issue, so we actually make publicly available a data set. What we do is we scrape SEC filings, and we actually list the filing details of every single crowdfunding deal in the US, and we update it every quarter. When I say we, again, it's a collective we, it's actually Robert who does it, and any other PhD student after. So I like crowdfunding. So then what I do find is that there's a lot of research in equity crowdfunding. There's a lot of research into rewards-based crowdfunding, not necessarily donation-based crowdfunding, because people don't realize that donation-based crowdfunding, although you hear about it whenever there's a hurricane or whenever there's a disaster, there's a GoFundMe, everybody wants to donate money. Now, there's sort of social entrepreneurs on these donation-based crowdfunding websites that are also more commercial versus social. So we wanted to see whether it makes a difference with the commercial versus social. Sorry, I'm just going to check the time. And so that's how we sort of started with donation-based crowdfunding. Working on this with another PhD student. Initially, so we're just looking at how donation-based crowdfunders, when they have the same social goals, actually do prefer social versus commercial projects. And this is just an extension of my other research. So as I said, how does my research evolve? It becomes I do the literature review, I do my own research, and I keep track of what would be interesting out there. And this is where I think there's a lot of room. There's a lot of room for international crowdfunding. So because there's crowdfunding usually, it's local. But when we did the research, we found that, there's data that finds that between 10% to 32% of crowdfunders actually provide funding internationally. So with that, can you imagine the level of the amount of work that could come out from that? So you have, regulatory differences between this crowdfunding. So what happens when there's fluctuation in exchange rates? How does that affect crowdfunders in their investments? And when we look at the transaction costs, why crowdfunding to us is very important is because angel investment is about 45%. So you get 60, you get probably about 55 cents on the dollar for angel investment. Crowdfunding is about what you would get for a low IPO. So you're looking about 7%. So that's why we think that, so it's about 5 to 7%. So that's why we think crowdfunding is one of the better ways for social entrepreneurs, donation-based entrepreneurs, and even firms to raise money. So that's just sort of what it is. Related to that, because I do crowdfunding research and I do venture capital, so it's venture lending, so this is sort of peer-to-peer lending. Same thing, we did a paper where we looked at how entrepreneurship is encouraged by the changes in laws in peer-to-peer lending. We looked at the 50 states. We looked at the states that don't allow peer-to-peer lending. We looked at the states that do. We did a difference in difference test. So we looked at the same demographics, 10 miles border in, border out. So 10 miles, the equidistance from the border. We looked at their crowdfunding activities. And so, there's, I'm not going to go into the beauty of peer-to-peer lending because of time limitations, but, you can see that the pros will also lead to cons. So you've got a broader pool of global investors, which may not necessarily be a good thing. We know from venture capital research, too many investors means less capital. You've got multi-currency loans, higher systemic risk, right? So the pros could also lead to cons. So if you could study the cons, that will also be quite interesting. There's a lot of room for synergies of various fintech types. So you've got combinations of the type of fintech. So when we talk about mobile money, we're looking at peer-to-peer lending, we're looking at crowdfunding. Nobody's looked at across, right? Across the board. Extent to which fintech substitutes or complements what entrepreneurs or finance or companies are looking at. And then, of course, how it interacts with the strategies for entrepreneurs. And so, again, these are just ideas that I have that I hope some of you will come up with these ideas. Another area of research that many of you are in are CBDCs. I'm working on, again, Zach, another PhD student, and Shane Corbett and Doug. We're looking at the rapid development. We've heard papers, and we'll hear papers today on how the infrastructure matters for CBDCs. But ours was a simple research. Again, it's a working paper, and what we're looking at is just the whether financial stability matters, whether we could look at the regulatory framework. And what we find is that, yes, countries could use CBDCs to complement their current the markets, but and they're using it as sort of like there's a shot in the arm for their financial development, which is great if the financial regulation could keep up with it. So what we find is that the advancement actually is very much influenced by the regulatory frameworks. So this is sort of what we're sort of looking at. Very preliminary, just sort of, this is interesting to look at. And so what I also want you to consider is what can go wrong, as I said. So we have here, there's a global cyber law tracker for the UNCTAD. So, and for me, it's if something goes wrong. So if Expedia doesn't come up with my flights, or if as you said, so my cryptocurrency exchange goes down. What do? Is it regulated by e-transaction laws? Is it regulated by consumer protection, like in the US? Is it data privacy laws? Is it cyber? So which one is in control? And all the countries have different regulations. So this is, to me, quite interesting, right? How under-regulated. But yet, at the same time, if we're incorporating CBDCs, it matters. Regulation matters. If you recall, back to not only do I have a VC background, I have a law background. So this is sort of where I sort of look into this, international regulation. So this is just a snapshot of what I do on a daily basis as I think about research. And as I'm listening to your presentations, sort of I always wonder how I can add to that. I mean, not your paper, but just, an extension of your research. And so, just think about interdisciplinary work. Think about how you can expand what you have, because this is such a fun area to research. This is an untapped area relatively. You think it's because it's so hard to publish, you think that it is saturated. It's actually, maybe it's just finding, like water basically through a stream. It's just finding the way downstream instead of, sort of swimming like the salmon, so to speak. So thank you again. I think I'm running out of time. Thank you again for your attention so early in the morning, and it's after an amazing dinner. Thank you so much, Mustafa, Peter. It's for your hosting us. It's we're really having a lot of fun.
Thank you. Thank you so much, Sofia. Thank you so much.
Thank you.
Yes, we may have one question due to time limitation. So.
Thank you very much for the presentation. Can you hear me, right?
Yes, I can.
Yeah. Thank you very much for the presentation. And my research field is entrepreneurship, as a matter of fact. And I just want to hear your opinion on, since you mentioned that you were co-editor and all for different entrepreneurial journals. What are you exactly looking for in an entrepreneurship paper? Would you care to see qualitative? Would you care to see some how do you call it, critical management theory within entrepreneurship?
So when I tend to get entrepreneurial finance papers, right? So it has to be quantitative to a certain extent. The extent of the data or the depth of the data may be different from traditional finance papers because I understand how difficult it is to get data. So if you're in finance, if you don't have 10,000 companies, then you're in trouble. Whereas for entrepreneurial finance, I understand there are limitations. Also, I'm for entrepreneurial finance, I need to see a bit more theoretical development, which is not necessarily so when it comes to traditional finance. So theoretical development from either the strategic aspect or from an entrepreneurship aspect or from management aspect. So remember, entrepreneurial finance is still, it's still that in between where a lot more finance academics are going into entrepreneurship and these journals, which may not necessarily have been targets 10 years ago, and now they're increasingly becoming much more empirical. So it's a balance. I need to see the qualitative and the quantitative. And unfortunately, this is the way it's going. You can ask any editor, they'll see that it is becoming increasingly difficult to meet the quantitative, which is good or bad. But again, I only work in the finance area. So there may be, so that's why it's sort of important, because a lot of the reviewers will be either finance trained, entering into the entrepreneurship, or entrepreneurship scholars that are very well trained in financial methods. But yeah, I mean, but then having said that, the strength of many entrepreneurial finance scholars is their ability to extend theory. So their deep understanding of entrepreneurship theory, strategy theory, management theory, which is not necessarily so for a lot of finance scholars. So that's why you also see a lot of finance scholars co-author with entrepreneurship scholars to be able to do that. Remember, entrepreneurial finance goes up to IPO level, which is already, theoretically publicly listed companies. So that's when it goes into, you're going to get deep data since 1930, so to speak, right? So very different than what we're talking about today.
Thank you. Thank you, Sofia, one more time.
Thank you.
And thank you very much for the presentation.
Oh, you're welcome. Thank you for having me. Oh, thank you. Thank you very much.
And this is for you as well.
Oh, thanks. Thank you.
Thank you so much, and thank you for our colleagues who are following us via YouTube channel as well. Thank you.
Thank you.